What if I told you that a $25,000 investment today could create generational wealth? Sounds like another YouTube clickbait, right? Well, let me introduce you to Sarah. In January 2024, Sarah had a choice. Spend her $25,000 savings on a dream wedding, or follow a little-known AI investment strategy I'm about to share with you. She chose the latter. Here's the kicker. While her friends were getting 4% in their savings accounts, basically losing money to inflation, Sarah's portfolio did something extraordinary. Think about this. A regular savings account would give you just $1,000 a year on $25,000. That's barely enough to keep up with rising prices. But what Sarah did was different. And before I reveal her returns, let me tell you what everyone gets wrong about AI investing. See, most people think you need to pick the next Microsoft or find the next ChatGPT to make money in AI. That's exactly what Wall Street wants you to think. The reality, the biggest wealth transfer in history is happening right now, and it's not about picking single stocks. It's about something far more powerful, something that Warren Buffett himself says is the best investment for 99% of people. In the next 15 minutes, I'll show you why traditional tech investing is dead, the exact strategy Sarah used, 4 AI ETFs that almost nobody is talking about, and the one ETF that's outperforming 98% of professional investors. By the way, Sarah's $25,000? It's now worth... But first, let me show you why timing has never been more critical than right now. Just look at what's happening in the AI industry. Companies are pouring billions into AI development. From healthcare to transportation, from education to entertainment, AI isn't just changing how we live, it's creating massive wealth opportunities. The kind of opportunities we haven't seen since the early days of the internet. But here's what makes this moment different. You don't have to be a tech genius or have insider connections to profit from it. You just need to know where to put your money. And that's exactly what I'm going to show you today. Before we dive into these life-changing AI ETFs, smash that subscribe button and notification bell. Remember when people thought the internet was just a fad? Back in 1995, if you had invested just $10,000 in Amazon, you'd be sitting on over $12 million today. But here's the thing. Back then, picking Amazon wasn't obvious. Plenty of other companies like Pets.com and MySpace seemed just as promising. That's exactly where we are with AI today. But there's one crucial difference. Let me take you back to December 2022. ChatGPT launches, and suddenly everyone's talking about AI. Tech stocks start soaring. Nvidia shoots up 800%, Microsoft jumps 150%, and Google seems unstoppable. Everyone's trying to pick the next AI winner. But here's what most people are missing. And this is crucial. You don't need to pick the next Nvidia to make life-changing money in AI. Think about the California gold rush for a moment. You know who made the real fortune? Not most of the miners, but the people who sold them picks and shovels. In today's AI revolution, ETFs are your picks and shovels. They let you profit from the entire AI boom without betting your future on a single company. Let me show you what I mean. While everyone was chasing the next big AI stock in 2023, Sarah took a different approach. Instead of gambling on individual companies, she invested in something much smarter. AI ETFs. These aren't your grandmother's index funds. These are carefully curated portfolios of companies driving the AI revolution. We're talking about companies developing AI chips, building massive data centers, creating AI software, and actually using AI to transform their businesses. But here's where it gets really interesting. Most investors, even the pros, are looking at AI ETFs all wrong. They're focusing on the big names like Microsoft and Google, missing the hidden gems these ETFs contain. Companies you've probably never heard of, but that are absolutely critical to the AI infrastructure. Companies that could become the next Nvidia. In fact, let me show you something that shocked even me when I first discovered it. Out of all the companies in the top AI ETFs, 60% of them are not household names. These are the companies building the literal foundation of the AI revolution. And when you invest in the right AI ETFs, you own pieces of all of them. ETF number 4. Global Robotics and Automation Index ETF, ROBO. Let me walk you through ROBO, the $1.04 billion powerhouse that's quietly revolutionizing the AI landscape. I call this the industrial giant of AI ETFs, and here's why it's more exciting than most people realize. While everyone's chasing flashy AI software stocks, Robo is building an empire in the physical world of AI. With 79 carefully selected holdings, it's not just diversified, it's strategically positioned across the entire robotics and automation ecosystem. Let me break this down in a way that'll show you exactly why this matters for your money. Here's what makes Robo fascinating. It's heavily weighted in two crucial sectors that are the backbone of the AI revolution. A whopping 51.40% in industrials and 37.62% in technology. Think about that. Nearly 90% of your investment is focused on the sectors that are quite literally building the future. Add in 8.58% in healthcare automation, and you're looking at a portfolio that's positioned exactly where the money in AI is flowing. Now, let's talk performance, and I'll be completely straight with you. Robo's returned 7% in the past year and 41% over the past 5 years. But wait, you might say, that doesn't sound explosive. Here's what most people miss. This ETF isn't about overnight riches. It's about owning the companies that are building the physical infrastructure of the AI revolution. Let me show you something interesting about its top holdings. Harmonic Drive Systems, sitting at 2.57% of the portfolio, makes precision control equipment that's essential for robotics. Hywen Technologies, at 2.09%, is dominating the industrial automation space. And look at Intuitive Surgical at 1.76%. They're revolutionizing robotic surgery. These aren't household names, but they're the companies doing the heavy lifting in the AI revolution. Here's the really clever part about Robo's strategy. No single company makes up more than 2.57% of the portfolio. Why does this matter? Because you're not betting the farm on any single company. Instead, you're investing in the entire robotics and automation trend. Yes, you're paying a 0.95% expense ratio, but think of it this way. That's less than $10 per year for every $1,000 invested to get professional management and quarterly rebalancing. And here's a hidden advantage most investors miss. Robo pays a dividend yield of 0.55%. While that might not sound like much, it's extra cash flow that most pure tech investments don't offer at all. Let me show you the real power of Robo's 7.11% compound annual growth rate. If Sarah stays patient with her $25,000 investment, here's exactly what happens. In 10 years, her initial $25,000 grows to $49,612. That's nearly doubled, through the steady growth of robotics and automation. By year 20, that same $25,000 becomes $98,455. Almost $100,000 from a single investment in the backbone of the AI revolution. And in 30 years, her initial $25,000 transforms into $195,310. That's over $170,000 in pure profit, all from investing in the companies building the foundation of tomorrow's technology. Now, I know some of you are thinking 7.11% seems modest compared to those AI stocks promising overnight riches. But here's what the smart money knows. While others are gambling on finding the next big winner, Robo investors are systematically building wealth through a portfolio of 79 companies that are actually making AI possible. And if you think these returns are interesting, wait until you see our number 3 pick. It takes a completely different approach that could potentially accelerate these returns even further. ETF number 3, Global X Robotics and Artificial Intelligence ETF, BOTZ. While ROBO plays it safe, BOTZ takes a bolder approach. With $2.59 billion in assets, this isn't just another ETF. It's a concentrated bet on AI's biggest winners. And let me tell you why this ETF is what I call the pure play powerhouse. Instead of spreading your money across 79 companies like Robo, BOTZ focuses on just 44 carefully selected champions. And when I say champions, I mean it. Look at their top holdings. NVIDIA makes up 13.12% of the portfolio. That's the same NVIDIA that's powering nearly every major AI breakthrough we're seeing today. But here's what's really fascinating about BOTZ's strategy. Their second largest holding is Intuitive Surgical at 10.46%. If you're not familiar with them, they're dominating robotic surgery. Then you've got ABB at 9.04%, a company that's revolutionizing industrial automation. See the pattern? Bots isn't just buying AI companies, they're betting big on the leaders. Now let's talk real numbers. BOTZ has delivered a 50% return over 5 years, which translates to an 8.45% compound annual growth rate. Let me show you exactly what this means for Sarah's $25,000 investment. In 10 years, Sarah's initial $25,000 grows to $56,202.50. That's $31,202.50 in pure profit. By year 20, that same investment compounds to $126,347.50. And if Sarah stays patient for 30 years, her initial $25,000 transforms into $284,045. That's over $259,045 in profit from a single investment decision. These aren't hypothetical numbers. They're based on BOTZ's actual 5-year performance. Of course, past performance doesn't guarantee future returns, but it shows the power of compound growth in the AI sector. Now, you might be thinking, but what about the risk? Yes, BOTZ is more volatile with a beta of 1.55, meaning it moves more dramatically than the market. But here's the trade-off. You're getting concentrated exposure to AI leaders with a lower expense ratio of 0.68% compared to Robo's 0.95%. Look at the sector breakdown. 46.12% in technology, 34.96% in industrials, and 15% in healthcare. This isn't just diversification, it's strategic positioning across the sectors where AI is making the biggest impact. And if you think these returns are impressive, wait until you see our number 2 pick. It takes an even more aggressive approach that could be perfect for investors willing to take on more risk for potentially higher returns. ETF number 2. Global X Artificial Intelligence and Technology ETF, AIQ. Let me introduce you to AIQ, what I call the Tech Titans portfolio. With $2.61 billion in assets, this ETF is doing something completely different from our previous picks, and the numbers are frankly stunning. While bots and robo focus on robotics, AIQ is capturing the entire AI revolution across all sectors. Look at these returns: 26.63% in the past year and an incredible 110.79% over 5 years. That works out to a 16.06% compound annual growth rate. Let me show you what this means for Sarah's $25,000 investment. In 10 years, her investment could grow to $109,287.50. By year 20, we're looking at $477,161.25. And if Sarah stays patient for 30 years, her initial $25,000 could balloon to over $2 million. That's the power of compound growth in the AI sector. But here's what makes AIQ truly special: its unique portfolio structure. Instead of focusing solely on robotics, AIQ is heavily weighted in technology at 65.45%. Look at their top holdings: Tesla at 4.52%, Broadcom at 3.90%, Netflix at 3.83%. These aren't just AI companies. They're companies using AI to dominate their industries. What's fascinating is how they've structured their 86 holdings. No single company makes up more than 4.52% of the portfolio, yet they've managed to capture the biggest names in tech transformation. The expense ratio? The same as BOTZ at 0.68%. Think about that. You're getting exposure to 86 companies, including tech giants and AI innovators, for less than 1% annually. Plus, there's a small 0.14% dividend yield. Not much, but it's extra cash flow while you wait for the growth. With a beta of 1.28, it's actually less volatile than BOTZ, despite delivering higher returns. But here's what most investors miss about AIQ. It's not just a tech fund. With 13.80% in communication services and 13.23% in consumer cyclical, you're investing in how AI is transforming entertainment, social media, and consumer behavior. This isn't just about investing in AI technology, it's about investing in how AI is reshaping our entire world. ETF number 1. Robo Global Artificial Intelligence ETF, THNQ. Let me introduce you to our number one pick, THNQ, what I call the silent disruptor. With $149.03 million in assets, it might seem small compared to our previous picks, but don't let that fool you. This ETF is delivering some of the most impressive returns in the AI space, and here's why it matters. In just the past year, THNQ returned 23.29%, and over 5 years, it's delivered a staggering 117.42% return. That translates to a 16.84% compound annual growth rate. Let me show you what this means for Sarah's $25,000 investment. In 10 years, her investment could grow to $115,850. By year 20, we're looking at $536,812.50. And if Sarah stays patient for 30 years, her initial $25,000 could explode to nearly $2.5 million. That's the transformative power of compound growth in focused AI investing. But here's what makes THNQ truly unique: its laser-focused approach. A whopping 73.83% of the portfolio is in technology, but not just any tech. Look at their top holdings: Raspberry Pi at 2.56%, Ambarella at 2.43%, and even Google's parent Alphabet at 2.32%. Notice something different? Unlike our previous ETFs, no single holding dominates the portfolio. Every company is carefully weighted around 2%, creating what I call democratic diversification. With 57 holdings, THNQ is more concentrated than AIQ's 86 companies. But here's why that's exciting. Each company has been handpicked for its AI potential. The 0.68% expense ratio is identical to AIQ and BOTZ, but you're getting a more focused exposure to AI innovation. Yes, it comes with slightly higher volatility, beta of 1.35, but that's the price of potential outperformance. What I find fascinating about THNQ is its strategic position in emerging AI trends. Beyond just tech, it has 10.73% in consumer cyclical and 6.89% in healthcare. They're not just betting on AI development, they're investing in how AI is being applied across different sectors. From Cloudflare's AI-powered cybersecurity to Alibaba's AI-driven e-commerce, THNQ is capturing the full spectrum of AI application. So there you have it. 4 powerful ways to invest in the AI revolution, each with its own unique approach to building wealth. Remember Sarah's choice at the beginning? Instead of spending her $25,000 on a wedding, she invested in AI ETFs. If she had split her investment across these 4 ETFs, even using the most conservative return of 7.11%, she'd still be looking at significant wealth creation over time. But by focusing on our top picks, particularly THNQ and AIQ, her potential returns could be life-changing. The AI revolution isn't coming. It's already here. The question isn't whether to invest in AI, but how. These ETFs offer you a way to participate in this historic wealth creation opportunity without having to pick individual winners. Whether you choose the steady approach of Robo, the focused strategy of bots, the tech-heavy AIQ, or our top pick THNQ, you're positioning yourself to benefit from what could be the biggest technological transformation in human history. Remember, the best time to plant a tree was 20 years ago. The second best time is now. The same applies to investing in AI. The revolution is happening. The only question is, will you be part of it? If you want to stay ahead of the AI investment curve and never miss future opportunities like these, make sure to hit that subscribe button, tap the notification bell, and drop a comment below telling me which AI ETF caught your attention. This video is for educational and informational purposes only. Investing carries risk, and past performance doesn't guarantee future results. Always do your own research and consult with a qualified financial advisor before making any investment decisions.